Hey, yo, happy new year, Outliers. Welcome to 2025. We are back on the actual setup. And let me tell you, this is pretty sweet. Also, not going to lie, I'm not sure that it's any coincidence that the cat literally just posted right now, for those that didn't know. It's whatever this is. This is Dave Chappelle. I don't know this skit. I don't know what this skit is. You guys will have to let me know. I don't know what this skit's about, but it looks like beckoning something towards him. Come to me is what I'm picking up here. Come to daddy, or whatever the beaded head thing is, which is kind of fun. Also, your boy's in the middle of fighting with United Airlines, having a blast with that, trying to get a refund for a ticket. I proactively changed some of our flights to Calgary. We were flying first class, and then we needed to change our flight. In the process of changing our flight, we went to board, had boarding passes, everything looked good. We went to board. They're like, yo, you're not checked in. I was just like, that's fascinating because I have a boarding pass. Anyways, we were then moved to like an exit row, which was fine, but not obviously what I paid for. So still like a week later trying to get a fucking refund from United. So having a blast. Looks like Choppus joined Outlier sponsor. Thank you for sponsoring the channel. People like you make the world go around, between the folks that are on the YouTube members, the people that subscribe to the Substack, the people that are in the Patreon. You all provide the foundation for what I'm able to do and what I'm able to focus on, which is awesome. I'm genuinely thankful for all of you. And I want to spend a few minutes at the beginning of this actually just reflecting back a little bit on the year. I think I go through this process to try to make sure that I'm generally moving in the correct direction, focusing on the things that I want to focus on, and making progress on the things that I'm trying to make progress on. And this year was interesting in a lot of different ways, because this is the year that I came across, well, really that GameStop started running, and that became a big part of what I spent time creating content on. And that's been a unbelievably welcome add to what I do. And I know for some of the diehard fans, at least of the channel, they're like, yo, why are you spending so much time on GameStop? And I just try to remind them that I'm learning a lot. And people that have been in markets for as long as I have, it's not as common to be able to learn a lot of brand new things. And that's literally what's happening with GameStop in general, is I have an opportunity to learn a lot of new things. And that's a massive part of what motivates me, is learning. So that's been super, super fun. The original goal, I have it on my whiteboard right over here, over there. I'm holding a black pen so you can't see it, but over there, pointing with the black pen. The original goal was 25,000 YouTube subs. That was the original goal. And we exceeded that a little while ago. And then we kind of resumed back with like the slow, steady growth trajectory, which has been great. Actually, fun fact, in case you guys didn't know, but over the last week, I've gone through 2 different days where I've had massive amounts of subscribers coming off the channel, which to me looks like dead accounts being dropped. And I welcome this. I had 78 drop off and then 83 drop off, which is hands down by far the most I've ever had unsubscribe in a day. Typically it's, if there's a negative trend, it might be like 3, right? Because it's a small channel. So seeing that, actually, I'm really happy with, because I don't think that's individual people going in and unsubscribing that just happen to all line up on this specific day, right? That's not how those kinds of data points work. That looks like dead accounts being killed by YouTube. And I think that's great, because one of the things that I try to do is make sure that the content that I'm making is relevant, useful, but also authentic. Things that come from my heart, from my passion, and hopefully you all can feel that. Because if I'm spending time building stuff that I don't really care about, or if I'm just trying to spend time building content for the sake of trying to grow the channel, you all know full well by now, it's just not what I'm here for. It's not what I do. I actively essentially move against that goal. And a great example of that is in the Discord. We literally cut the Discord by almost 80%, I want to say. That doesn't help me grow, right? It's the opposite. But I care so much more over the quality of our community, the quality of the information I present. And that's one of the things I'm hoping to really dig down on in 2025. So my goal for 2025 is 40,000 total YouTube subs. So not like 40 additional, but 40,000 total. And that would represent the highest run rate. That's even including the surge that I got from stumbling into the GameStop community, which probably is about tapped out now. I would need to surpass that. So the overwhelming probability of me actually hitting that is pretty low. I would say maybe a 40% chance. But when I'm setting goals like this, I'm cool with that, because it's going to force me to get really innovative and thoughtful on how I can try to tap into that 40% success rate. And there's a lot of stuff that I have in the works right now. I'm going through integrating a ton of the feedback. And for the folks that have taken the time to submit feedback, you have no idea how helpful that is for me. The reason why I ask you all for the feedback is because I still am very much a one-man band. So I have limited time and effort that I can spend on things. So by understanding the things that are most useful to you, that lets me build stuff and focus on stuff that's most useful to you. And it's a much better use of all of our time. So thank you for those that have taken the time to fill that out, both from the general community, the broad Outlier community, which will always be free. That's never going to change. That's always going to be free. But then there's also the paid side of things that I'm always trying to innovate and make that really impactful for people, and to provide value that's more specific to that group. And I have a bunch of things in the works for that. So for the pro side of things, we already have our weekly live streams dialed in. We started a question form for those that are unable to make the live streams. I'm reconfiguring the Discord so that more of the conversation happens in the free section for everybody. But then in the pro section, there still would be more focus on like research. People have direct access to me, stuff like that. And the downside, as you all should be aware of, and I continue to remind you all of maintaining the free section of the Discord, is we're always going to have these fucking spam, and it's never going to go away. So I do my best to manage that. But for those that don't know how it works, what people will do is they'll join the Discord, they'll get past the initial verification, and then there will be people that stay in the Discord that don't communicate too much, that relay names, because you can see everybody. There's no way to turn that off, unfortunately. They'll relay names to accounts that pretend to be me or other people, and to try to trick them. So you should be aware of how the game works so that you know, one, to just stay out of the DMs, but two, if you do choose to DM, just be super certain who you're choosing to communicate with. But that is just, table stakes for offering a free community. And I hope that it's not super annoying for people, that you guys can manage it, because it's genuinely more important for me to maintain a free community in a free space. Because the thing is if we go through a place like Reddit is great and you can learn a lot from Reddit. The problem with Reddit, though, is that most of the interaction you're going to get there is going to be exactly the kind of interaction you would expect to see. So, for example, if we grab Reddit and let's just click this first one, got SMCI calls for June. Not my second purchase ever, but the one that comes before the second. I'll either learn or succeed. Hope I succeed. I hope it word it like that to avoid being auto spammed. Right? So there will be some interactions here, but if you think about the actual value of the discourse that's going on here, there's no value taking place here. There's just very little value. this person saying you picked SMCI as your first, or this person says the come out is often opposite, right? It's just like, it's just random words being said by random people. This is not what I'm interested in for our community. Again, this is not complaining or talking shit about Reddit. Reddit has its purpose, but the reason why most people go to Reddit is for anonymity. And through anonymity, you see a completely different version of people than if it's somebody that you actually know, that you get to learn a little bit about, that you actually have a bit of a relationship with, right? Like a lot of the people that have been around in the Discord for a while, we actually kind of know each other for literally several years now. And we have a sense of people. That goes a long way in conversations and things like that. So I am so much more interested in fostering that kind of community, because to me, that's where the gap currently sits. There's a lot of this kind of stuff out there. There's a lot of the alert services out there, which is the bane of my existence. I hate that stuff. So that's what I'm really focusing on, is to try and continue growing our community, but not growth in terms of just numbers, growth in terms of quality of the relationships. A big thing that I'm trying to work towards is getting our community members to interact more regularly with one another without me needing to be the starter of the conversation or the leader of the conversation. I want more and more for different of our community members to step up and to start fostering that dialogue. And I can see it. And it's awesome to see, because that's where the beauty of a community like ours will really take hold. Because there's a reality of things. Again, I am one dude. I cannot spend the amount of time that I would like to spend directly interacting with each person with the level of quality that I would want. Because that's another thing that I refuse to let go. I refuse to give people bullshit fast answers because it's easier for me. Meanwhile, the vast majority of what we talk about has tremendous nuance. And again, that's another thing that's completely missing, is the people that are willing to take the time to explore the nuance. Things like buying isn't always bad. Selling premium isn't always bad. Stuff like that. So I really appreciate the community members that have been stepping up more and more, interacting and even asking questions, helping people answer questions. That stuff is huge. And what you will notice is the more we do that as a community, the more it will take a life of its own, and the better of a resource it's going to turn into for all of you. Like that's just the facts. So the interaction of the community, to be completely honest, it doesn't really benefit me as a person that much. I'm going to do whatever I'm going to do, and I've always done it that way. So what I mean by that is the way that I trade is completely self-sufficient. I don't look at shit. I just do my own stuff. But for people that are figuring out what they're doing, and people that are trying to build their approach or refine their approach, that communal aspect is something I always wish I had. And now I'm really excited to be able to continue furthering that with you all. 2024 was a killer year. So I'm going to go over like my performance review and all that stuff. I'll probably do it on the main channel at a high level, just so that everybody can see where I landed. It's no secret. I try to be as forthcoming as I can about what I do and my overall performance, so that just people know. It's not because I think it's something that serves as a top end for other people or a bottom end. It's just what I do, and it's what I'm capable of. But the main thing is there's just such a gross lack of transparency in the trading space that's the main reason why I give you guys those performance updates. And then for those that are in the pro section, obviously we'll go through the annual deep dive together. That's slated in my mind for this Sunday, is to actually go through and start sharing a lot of the lessons learned, because this year is fascinating. This year I changed a lot. And for anybody that started with the channel when I first began making videos back in 2020, you'll notice a lot of differences in what I talk about and how I do things, even from then to now. One, again, that's 4 years of research later. But two, more importantly, you will notice that I do my absolute best to adapt to the market. So what that means is I don't have the luxury of always doing the same thing every single year just because that's what I do, the same thing or whatever this one thing is. That's just not how I trade. My ultimate objective as a trader is to do everything I can to see what the market is doing and then to try to fit with the market, to take as much advantage of it as I possibly can. And when I say take as much advantage, that doesn't mean pure top line returns. That's not the most advantageous way to take advantage of the market. It's also on a risk adjusted basis. So that is the goal for 2025. So to recap 2024, absolutely great trading year for me. It was over 90% year, not triple digits. I thought about that for a little bit. And I actually posted about that in the Discord because that's another thing I really want to continue trying to represent to you all, is that I am not a dude that has it all figured out. I absolutely don't. I'm 33. Fortunately, I've done really well, but I'm still figuring this shit out. I have a long way to go before I consider things like dialed in. And I don't even know if they ever will be with a person that has a brain like mine. It's a continual optimization process. But I posted in the Discord a while ago about a thought process I was having with myself. And I purposely share those things with you all to show you that I don't have it all figured out and that I am still reasoning and thinking through things myself. And it's okay to do that. I'm not omnipotent. I am just a fucking internet dude. I try to remind you all of that pretty regularly because sometimes when I watch different videos and stuff, it feels like the people try to come off as omnipotent or they have an answer for everything. And again, I just find that so disingenuous. There's a lot of shit all of us don't fucking know. And that's okay. It's okay to not know everything. You're never going to know everything. So I was thinking about, there was a point during the year where I was just like, I actually could have another triple digit year. I absolutely could have. And I thought about it for a little bit and I was just like, why do I want this? Like, why do I want another triple digit year? What's the purpose behind it? The money obviously is good, right? Always want to make more money, always helpful, for sure. Great. But I'm not at a spot where the difference between a 90% return and a 100% return is going to make a massive difference in the next year for me. So it's not for that. So then what was it? Why did I even think about it? Well, it's because triple digit is a pretty strong return. And it's also something that it has a clear benchmark, right? Like 100. Our minds work in those number patterns. And we've looked at examples like this before. Even if I look at this stock that's up on the graph now, if we go into the options chain, if I go into increments of 5, I already know I'm going to see more options in increments of 5 than other increments. That's just a natural presence for people in the way that they select things. So my brain was doing elements of that when I saw that another triple digit year is definitely within possibility. So let me try and see, what I could do, what I might be able to pull out here. And then I thought about it more and I realized that it was just a completely superficial vanity metric for me. And it didn't necessarily add any significant value to what I was doing. It didn't add a lot of purpose to what I was doing. So then I decided that if I hit it, cool. If I didn't, okay, that's fine too. And I didn't. And I didn't go out of my way to hit it. And it was essentially half a trading month for me because I was traveling for half of it. And what that means is before I travel, I have to start paring things down. So really I traded for like 10 days this month. If that, I did trade a little bit while I was traveling, but not enough to make that kind of movement. So yeah, very, very interesting end of the year for me. A lot of changes in strategy specifically. Process didn't change that much. The way that I do things hasn't changed that much for a long time now, but the broader methodology definitely has. And that's what I want to spend a little time talking about once I finish consolidating all of those things. The other thing that we have to talk about quickly, obviously, is the paper trading challenge. So for the Outlier Pro members, we started a paper trading challenge. I've ran these before. And we now have the 2024 results. This was just for the final quarter of 2024. And if we take a look and see where we landed, we have our C2C tab, and all of these should be completely updated. I don't know for these members where they landed because they didn't input their stuff here. So I'm not looking in the individual tabs. This is where I look. And this looks like Isra is our winner. Now, I will go through and carefully check everything just to make sure that it all lines up. But when we take a look at the overall performance, it's about the distribution I would expect. We had members that were just trying ideas. We had members that were working on specific areas of the skill set. So this overall is a very reasonable performance. We do have a couple that absolutely had runner negative year or quarter, I should say. And those always necessitate taking a closer look, right? And see what happened, what went wrong. The fact of the matter is this paper trading challenge is the exact place to do that. This is the exact place to learn. That's the point of it. So we'll run through this, but so far it looks like this will be our winner, Isra. So I'll make a couple posts and I'll talk to the Patreon folks because we did have optional pot open for the winner. So we'll figure all that out. Now for this next year, we have a new structure and a new imperative. So for this coming year, rather than paper trading from the perspective of just trying to maybe test a new strategy, test a new approach, test a new idea, what I really want the participants to do this coming year is to trade this paper trading account exactly as they intend to trade their real account. And for those that have a real account that they're going to continue trading, cool. Then you could just mirror your stuff between them. If you don't have a real account, you're still paper trading, cool. Treat this as your actual account. The reason is because we now have a full year that we're going to run this on. We're going to take quarterly snapshots as like a milestone, but we have a full year of performance in front of us. And what I'm going to do is the same thing I've done previously, which is each week I'm going to go through different people at random and take a look at what I can see and give you feedback. That's exactly what we did this year, where I can pop open one of these individual tabs. It'll take me directly to it, and I can look through what happened. I can look through what kind of trades went on, how they were placed, the thought process behind it. I can look at things like trade sizing, all of those kinds of details I can look at and try to give coachable feedback. This is the best possible way, literally the best possible way to learn how to trade, in my opinion. The idea of just learn by doing, this is how you learn by doing while you have a finite resource, because that's the reality of trading. You have a finite resource called money. So if your approach to learn how to trade is baked around, well, just kind of play around with real money and see how it goes, the overwhelming probability is you're going to fucking lose it. The overwhelming probability. And it's just because this shit is complex. It takes a long time to figure out. So the probability that you're going to start even with a $50,000 account and just wiggle your way through and learn using real money on that $50,000 account without either entirely blowing it up or drawing it down by over 50% is about null. I'm very confident taking that position, about null. So the issue with that is you only get so many repetitions then, because you only have so much money you can use. So if you can apply a true trader's methodology to paper trading and take it seriously like we are here, we're literally logging our trades every freaking day. That takes effort, but you can learn so much from this process without lighting your money on fire. This is, I think, one of the coolest things that you have available to you from a learning perspective. And I cannot encourage everybody, even if you're not in the Outlier Pro Patreon, and you're not going to be in this challenge specifically, I genuinely believe everybody should be doing this. And it's for those exact reasons. It gives you a chance to learn, refine your craft without lighting money on fire that you probably don't have to just light on fire. Really excited because we're going to have a full year now. That is such a great data set, especially to capture in a really organized fashion like we're going to be doing, which is going to be awesome. So that is the paper trading challenge for 25. That is the winner for 24. So congrats to Isra. And like I said, I'll validate it, make sure everything looks good, because I did see a couple open trades. Those all have to be closed out, and we have to make sure that the numbers settle where they should be. But overall, looks pretty good. So that now leads us to the second part of the video today, which is actually to kick off 2025. We spent a little time thinking about 24, thinking both about personal growth, but also about trading, what we're trying to accomplish there, what we did accomplish there. And now it's time to take a look at 2025 and see what's coming up. So one of the things I did earlier was I ran through, I think it was through ChatGPT here, and I'll read it to you. I asked ChatGPT, I'm using O1, and I asked GPT, research all projections for the economy and stock market in 2025. Summarize your findings. So let's do that. Moderate growth. IMF forecasts. The International Monetary Fund's World Economic Outlook, which is the WEO, you definitely should read that, has indicated global growth settling in the range of 3 to 3.5% through 2025. The IMF's overarching view is that global growth will remain moderate and gradually stabilize, though downside risk persists, which we can see. Emerging markets, particularly Asia, are expected to continue growing faster than developed economies. We continue to see that trend. So I could understand why they would have that perspective. And there's a lot of different ways you can trade that via various ADRs and stuff like that. But I do agree that there's an opportunity there. The U.S. economy, slower but steady growth. Many investment banks like Goldman Sachs, JP Morgan, and economic think tanks forecast that the U.S. will see slower growth compared to 2021 to 2022, with GDP expansion possibly around 1.5 to 2%. So that is pretty slow. The pace is expected to remain below historic boom levels, but generally avoids a severe downturn, barring any large external shocks. That's going to be one to keep a close eye on. The inflation and Fed policy projections suggest inflation will continue to be moderate, but may remain above the 2% target for a while. By 25, the forecasters anticipate the Fed will have eased off the rate cycle, likely stabilizing. However, there's no consensus on the exact timing. So let's go into the stock market projections specifically. And this is looking at earnings growth first. Analysts generally see moderate earnings growth returning by 24 to 25, inflationary pressures and supply chain issues normalize, which we see. Companies with strong, this is important, companies with strong pricing power and robust balance sheets like technology, some consumer sectors, are projected to fare better than those heavily reliant on discretionary spending. This makes a ton of sense. The reason why this is so important is because those with pricing power can withstand the higher inflationary periods longer without over-reliance on near-term spending at unfavorable rates and conditions. So I think that this makes a ton of sense. If interest rates remain relatively high, equity valuations could be constrained. Conversely, if the Fed furthers the cuts, it may boost valuations. That's kind of, obvious. Investment houses often project the S&P 500 to post moderate single-digit to low double-digit returns if the economic soft landing scenario holds. Sector leadership, technology still viewed favorably. I think that's still been the belle of the ball. Energy and industrials benefiting from shifts in supply chains and infrastructure spending. I don't know fully about that one. Energy has been struggling hard body. So I don't know how strong I agree with that one just yet. Consumer discretionary more vulnerable to elevated inflation, interest rates, but could bounce back if spending remains resilient. Which is also interesting because discretionary has been outperforming staples. So I question both of those. Global, I don't care so much about. Potential risks, uncertainties, geopolitical tensions. There's still a ton of shit going on. The stuff with Ukraine is going to be a big deal. Essentially, all of that. The follow through at Syria, all that stuff. Energy, the new energy initiatives are going to be really interesting coming from Trump, and the way that flows through the rest of the market will be very interesting, I think. And central bank missteps, if the Fed and other central banks tighten or loosen too aggressively, could spark volatility or stall growth. That's one of the major concerns that we literally have right now. All right. Soft landing versus a recession. Many projections hinge on the idea of a soft landing where inflation cools without a severe recession. However, a mild recession in late 24 or 25 isn't off the table. Well, clearly it's off the table for 24 because we're already fucking past that. Or 25 isn't off the table if consumer demand falls quickly or credit conditions tighten. So here are two big things, if you weren't aware, that you need to pay attention to. Specifically, consumer demand and credit conditions, the availability of capital. So two things to keep an eyeball as we rotate and move through 25. Because if you start to see those indicators starting to fall off, again, this is literally giving you a pre-warning that things might not look great. Stabilizing inflation, which we already know. Fiscal stimulus, we already know. Divergence, we already know. Yeah. Overall, I think that this is decent. I think that there's some stuff in there that I do challenge the like accuracy of. But in general, I think that's a completely fine overview. And as a reminder, the reason why I read that to you from there and then walk you through it is because I cannot overemphasize enough how much you should be using AI in your day-to-day to do just about everything. You are smarter with AI, you should use it. So there's my TED Talk on using AI, I suppose. Joseph says, can the bird flu affect interest rates? It's currently destroying farms. I don't know how bad it is yet. So let's see. Bird flu severity. December 18th. Patient hospitalized, severe case of H5N1, bird flu in Louisiana. Partial viral genome of the avian influenza virus that infected the patient in Louisiana indicates the virus belongs to the D1.1 genotype related to other D1.1 viruses recently detected in wild birds and poultry in the US. It's different than B13 or B3.13 detected in dairy cows. Determined that the patient had exposure to sick and dead birds in backyard flocks. Sporadic cases, severe H5N1 bird flu illness is not unexpected. No person-to-person spread of H5 bird flu has been detected. This does not change from the CDC's overall assessment of immediate risk to public health, which remains low. Yeah, I'm not sure just how impactful this is just yet. So, Joseph, like, could there be an interaction? Sure. But as it sits right now, it doesn't seem like there's a tremendous impact, at least as things sit today. So Joseph says there is no eggs and California's in a state of emergency. Yeah, well, a couple things. Eggs. Well, first, let's see if that's actually true, if there are no eggs. Current egg availability in the US. Let's see. Has been experiencing an egg shortage. that have decimated the supply of laying hens. In 22, we produced 92.6 billion. Avian flu, this is all 22. Okay, so it looks like there are eggs. Like, I don't see that there are no eggs. It looks like there's a constraint. So that's the first thing. The second thing is eggs are good, but like they're eggs. You're okay without eggs. Everybody's okay without eggs. So the main reason why I'm highlighting that is just taking this back to basic principles of assessing overall severity and impact. So it doesn't look like eggs are gone. And eggs in and of itself isn't going to necessarily cripple us in the near term. Now, if it goes on for too long, eggs are used in a lot of things. So it definitely would have a broader impact for sure. I want to be clear. I'm not saying that there's no impact, that this is no big deal at all. I'm just saying it's not the end of the world kind of deal. The second thing is the use of a state of emergency is specifically, it's a tactical use. You can use it for a lot of different things. So let's look at California state of emergency. And let's see. So this is 6 days ago. He has better lighting than I do. Proclaimed state of emergency. Action comes as cases were detected in dairy cows on farms in Southern California, signaling the need to further expand monitoring and to build on the coordinated statewide approach to contain and mitigate the spread of the virus. To date, no person-to-person spread of the bird flu has been detected, and nearly all infected individuals had exposure to infected cattle. They already established the largest testing and monitoring system, shocker, in the nation in response to the outbreak. This emergency proclamation will provide state and local agencies with additional flexibility around staffing, contracting, and other rules to support the evolving response. So the point I'm highlighting here is that don't look at state of emergency and take it as, oh, shit's going terribly, we're all fucked. That's not what a state of emergency is. The way that state of emergency is used is for resource management. And exactly the piece here that I'm highlighting for you, it's to provide slightly better access to things and to remove some of the bureaucratic overhead to be able to access them. That's the point. I make that point because a lot of people will see state of emergency and they'll think like, oh, we're fucked. You know, everything's going terribly. It's an emergency. But it's just a little bit sensationalized is the main point. Jeffrey Jones, Happy New Year to you, my friend. Welcome in. So yeah, the short is I don't think that this is a huge deal yet. That doesn't mean that it can't be a huge deal. It can be, but it's just early days. And this doesn't look to be that big of a deal to me just yet. And we'll absolutely see. That's the game, is we don't know yet, but we will obviously find out. It'll just take a little time. Cool. So let's close all that down. Let's see what this is. Might as well. And gold edges higher, likely to stay resilient in 25. Gold has done well. If we take a quick peek at gold /. Yeah, gold did pretty well. And it's been basing for a while now. Notice how it had this lower low, but then it caught itself. Had this higher low, this new higher low. Gold still looks okay to me here. Now, it's not doing anything impressive to the top end, but it's also it's not doing anything poorly to the downside in terms of like falling and rolling over. 20, no, we want to be at what, 24 was that? 25.98, create alert. what I'm doing is I'm getting rid of the contract specific and I'm using the normalized chart. So 25, 98, 98. For those that don't know, when you drop an alert like I typically do on futures charts, it'll default to the front contract, which I don't really care about the contract. This is the consolidated graph that's going to give us all of the different contracts normalized to one another. So that's why we look at this. So yeah, overall gold still looks pretty good to me. Now, again, I'll run through a bigger rundown, but I still have the covered strangle running in TQs, UPRO, IBIT, GME, and I'm actually going to reconfigure it a little bit this year so that it's not all in these leveraged tickers. The main reason for that is I want to start building part of the portfolio that I'm not cycling on as much. So I'll probably use SPY for the other section of the covered strangle. IWM has been my go-to for a long time. You all know that, more volatile, so you tend to get a little bit more premium. The problem is small caps are in a bad spot right now. So I will continue to monitor small caps. If there's a decent entry and opportunity in there, I'm always here for it. But I try to remind you all of this as much as I can. At the end of the day, you have to do what's right for you. I owe IWM fucking nothing. So if it's not behaving as I would need it to behave here in order for a covered strangle to make sense, then I need to do something else, which is okay. Because if we look at it on the year, it's ran essentially, started here at 199 to 220, had a 20-point move all year. It's, again, not an awful year, but that's not a great year either. That's a pretty inside year. I don't really love that. Now, another interesting thing, though, is when we look at SPY, SPY on the year had a really solid year. It started off at 427-ish. So really, really solid. Now, the problem, though, is if we take a look at equal weighted SPY, which is RSP, it had a good year, but not as good of a year. So this started around like 160-ish, 157, and it ended at 175. So a really good year, but the equal weight is showing still a pretty heavy dependence on a handful of names, which again, that's nothing new. I don't think that, well, it shouldn't be surprising to anybody. It's been the case for some time now, but it means there's a lot of different ways to position leading into 2025, depending on what you're trying to do. Now, for me, nothing changes. The fact that it's now 2025 versus 2024 literally makes no difference. I trade the market off of what it's been doing. So I know some people really like the idea of like coming in with like an annual overview or like an annual what to expect in 2025. Here's the facts. I have no fucking idea what to expect. I have no idea what's going to happen over the next year. I have no clue. We could have a bird flu right now that's super mellow and doesn't really do anything, or we can have a bird flu that gets super aggressive and starts torching things, right? Like that's why I don't care to come up with really specific things. Now, I do like to think through what general themes do I expect to exist? And there are a handful of those themes. One of those themes is inflation. We still are hypersensitive to inflation level data in the economy. If we see the economy slowing, that's going to spook the market big time because people are trying to decide still between this hard landing / recession versus a soft landing. And again, we don't know which of those it's looking like yet. It's leaning a little more soft as it sits, but it's too early to tell. We just don't know. So that's one of the themes that I'm absolutely keeping in mind for 25. Another theme that I think is pertinent is technology. Where do we think technology sits in terms of market dominance? Do we think technology is going to be the next leader for the year? And I personally do. I don't see a reason why that would change in the near term until conditions start to meaningfully change. And I just haven't seen the condition for that changing yet. I just haven't seen it yet. So one of the things I try to think about with respect to technology is that it has the ability to have an outsized impact relative to its cost. And there's not a lot of other industries that can do that. So what I mean by that is, let's say in oil and gas, that you really wanted to start crushing it in oil and gas. What do you need to do in order to produce more cheaply, or whatever the ultimate objective is? You have to leverage technology of some sort. Technology is the accelerator that just about every industry is leaning on in order to continue to evolve and accelerate. I just don't see that changing just yet. But again, even though I don't see that changing just yet, that doesn't mean it won't. This is the nature of Bayesian analysis. I conduct the analysis based on everything that's available to me today, and I come up with my best assumptions today. And then tomorrow, if some shit changes, it changes, and I update my mental models. Because one of the mistakes I think people get into is they'll be like, oh, okay, I think this is going to be the case for 2025. Let me position my whole portfolio. And again, if you're an investor, fine, you're playing longer term themes anyway. But as a trader, to try and position a portfolio off of an annual level expectation, I think is a fool's errand, because we can look at a couple examples even now where that might not reward you that handsomely. And I'll show you. So if we take a look at Nvidia, take a look. It ran from 47 up to 140. It did that in the first half of the year. If you got into Nvidia after this massive run up, you have just about nothing to show for it for the second half of the year. It didn't do much. So what I'm trying to highlight to you is that this is still a completely fine trade, no problem. But from a trader's perspective, my job is to try and capture this move. And then when this starts happening, to go to something else that is showing a move that I can monetize. Because you can monetize this for sure. You can trade short strangles. You can still trade this. I'm actually going to open up a new covered strangle in here. So I'm not saying Nvidia is bad. I like Nvidia long term. But if you try to overposition on some ideas that you have at the beginning of the year, I just think it's difficult, because unless you're omnipotent and you know what's coming down the pike, which I don't know anybody is yet. If you are, let me know, because we can make a lot of fucking money in this market together. But I'm just trying to position off of what's moving and what continues to define trends. So tech, if we're looking at things like Nvidia, has been rotating sideways for some time now. Meta has been doing a little bit better. And Meta is also starting to move into other things that I think will continue to give it a pretty solid position. And that's one of the beautiful things of finding your way into something like SPY, is if we take a look at what its holdings are. Oh, I was trying to figure out what this was telling me. You're essentially getting pretty decent exposure to some of these top companies. Now, it's still just grossly overweighted for the top three: Apple, Nvidia, Microsoft. I mean, just grossly overweight. But it still continues to do pretty well in that, with the weighting nonetheless, in terms of its performance. So tech, I still think, is the place to be. And there's a couple different ways to gain exposure to it, depending on how active you want to be and all that kind of stuff. But that's where I'm primarily looking, especially for growth, for things that are really starting to rapidly accelerate. I still think it'll be dominantly through tech. I'm very eager to see what the IPO world looks like in 2025, because it definitely slowed down quite a lot. So it would be nice to see IPOs pick up a little bit, and just to see some new names entering onto the market and moving things through. Let me take a look really quick. I don't know what the total IPOs were for 2024, but let's see if ChatGPT knows. I have to log in on this. Perfect. What were the total number of IPOs in 2020? Let's see. In 2024, the global market witnessed a notable increase in IPOs. In the US, there were 224, raising approximately 29.6 billion, a 50% increase over 23, which 23 was also really, really slow. So let's see if there's a chart. Let's do US IPO chart. Y chart probably has some. Yeah, there we go. So 225 here, pretty strong on a relative basis. 21 was crazy, absolutely crazy. And then before that, probably averaged somewhere in the twos. 08, 09, nobody tried to go, but it's typically higher twos, lower threes. So very interested to see how 25, do we continue on the growth phase or do we start to slow down? And I don't know the answer to that yet. We will soon find out, I presume. Tommy says, what about using XOK and CS, get more exposure to the tech high flyers? Yeah, that could be done for sure. I mean, it's not what I'm doing. The reason why I'm not doing that is because I'm still going to maintain the leveraged components. So I'm still going to use TQQs and UPRO. But the tech itself, the tech element of S&P is still the dominant force of it. So even though it has other stuff in it, the other stuff is at such low percentages that you're still primarily getting tech. Now, Qs is even stronger still as a distribution of the percentage of the fund, but it's still heavily, heavily tech for sure. Joseph says, I'm not sure if you answered this, but what do you think? But do you think Trump is serious about tariffs? And if you would do them, how will it affect the market? I do think he's serious, as far as I could tell. I think that he's not going to be interested in trying to like slap them on all at once, because that would provide just such a insane shock to things. But I do think that he's serious about it because he's trying to use it as a bargaining chip. And the only way that he can use it as a bargaining chip is if he's willing to follow through on aspects of it. So I do think he's serious. And I think that you'll see a series of effects, specifically depending on how they are implemented. That's the biggest component, is how they're actually implemented. Because if, for example, like China, if we start really, really aggressive with China, that can stir up a pretty big pot of back and forth that will impact a lot of the market, But beyond that, I don't think it's the kind of thing that would be slapped on right away. And it's because the amount of impact that would have, I just think Trump is aware of that, and it wouldn't really benefit just about anybody, even the companies, because you have to, again, like always put first things first. What is Trump trying to do with some of these tariffs? Well, one of the big things he's trying to do with the tariffs is move more business to the United States. He's trying to get more of our companies to produce domestically. Well, if you throw on massive tariffs all at once super fast, you don't actually further that objective. You don't, because they just start incurring massive losses, which I don't think really help to that objective. Now, if he comes in too light, meaning not serious enough, well, that's a problem, because then they don't take it seriously and they don't really care to move. So that's a separate issue. But I think that issue is a little more navigable personally, because if you have the tariffs, They know that they're going to come. You roll them out slowly. I think it starts to move the behavior in the direction that we want, at least in terms of domestic production. And the reason why I say the direction that we want is because domestic production helps us quite a lot as a country, because we're not stuck in some of the nasty scenarios we found ourselves with in terms of external production. You're essentially at somebody else's mercy that you can't control, which again is difficult to manage, I think. So it works while things are working and things are nice. But if we have stuff that, let's say, for example, from a military perspective, and we have a bunch of stuff that we rely on that's produced in China, and then the engagements with China start to heat up, it just becomes a massive weakness. So it'll be a bit of a balancing act, I think. Dan says that's relative to you, CDJ. I didn't see what you're... Oh, okay. CDJ says, is 500 shares considered a medium-sized position for when MOAS comes? Well, what is that? Yeah. Actually, Dan, what a great response. What is that? CDJ, what do you mean? Like, what does that mean to you? Because exactly as Dan is highlighting, it is a entirely relevant, or relative, sorry, not relevant. I'm placing my dinner order. An entirely relative perspective. So yeah, really only you can answer that, which actually is maybe I'll do it on a separate live stream or something just to not cross the streams. How do I want to do that? I'll just do a video right after this. So I did start a covered strangle in GameStop. I already had like the existing position. So what I did is I used some of my existing position and I poured it over like a median level cost basis, because I have a much better basis than what I'm going to use, but I want to pick something that's more relevant to people. CDJ says, what would you consider a medium-sized position on GME for you? I would say a medium-sized position would be like 30% of an account. 30 to 40% of an account. That would be like medium. So if you have $1 million, like $400,000, something like that. But yeah. The note though on that, CDJ, at least my recommendation is don't worry about labels. Don't worry about like what medium is or isn't. Don't worry if it's called medium, venti, or whatever the other terms Starbucks uses. Just whatever it is, make it make sense for whatever you think is going to happen and whatever you are trying to gain exposure to. That's what matters. It doesn't matter what the name is. It matters the size relative to what you're trying to do, always. So the other quick update for you all, the daily live streams, we should be back on a normal schedule. We actually might be running out to the desert for a few days, so they might get a little screwy for the rest of this week, but next week we should be back on standard fare. And then for the Sunday and Wednesday streams, I will do 2. The first one will be about a half hour on the regular YouTube channel, just updating the market broadly. And then we'll do the pro live streams for the second half hour after that to run through more specific stuff, go through individual positions, answer individual questions for people, kind of work through more detailed scenarios. That's the idea, spend a little time getting a bit deeper. And then the other thing I'm going to do is soon, I'm going to open up a submission for people that are interested in participating for the Outlier Options Trading Bootcamp, completely free. And it's a series that I do a couple times during the year. So what it is I work with people on a weekly basis, and we essentially make videos working through the trading skill set. Now, the goal for this is for it to be more at an intermediate level. So it's not going to be straight for beginners. It's going to be an intermediate level of content. We're not going to go over options basics. There's actually going to be a quiz. in order to join the thing. And that's not to be mean or anything. It's so that I can just make sure I'm getting in the right level of person so that the content can be what I want it to be. So that'll be coming up, but those will be, I don't know if they're going to be live streamed or dropped as recording on Fridays, but until then, Fridays will continue to be options trading basics. So the schedule is packed as usual. I've also stopped doing the daily market update videos because I'm doing them in the live stream, and it just kind of decreases the total number of videos that you guys are getting, so it's at least palatable. But I'm still targeting at least 2 podcasts per week. So I have a podcast. They generally drop around Wednesday, but it's kind of fluid. It depends on when I record with the person. And then the main channel videos will be out on Sundays now instead of Saturdays. So we'll run those on Sundays for a little bit, and then I might actually push them to Monday just so that the weekend's a little more open for stuff. So we have a ton of content. So you literally will have a live stream pretty much every single day. Saturday will still be GameStop for now. Sunday's market prep. Monday is market recap. Tuesday, just kicking it, hanging out. Wednesday will be like a market update. Thursday, trader hangout, kicking it. Friday will be options trading for beginners. Saturday, GameStop. Those are all the live streams. And then we'll still have the weekly video come out on Sunday. And then I'll still probably drop 1 to 2 other videos throughout the week that are just kind of temporally related about stuff. So that's what's coming up. As always, if you guys need anything, let me know. I'm here. I'm kicking it. I'm about to rotate over. I'm going to record the video about the GameStop coverage triangle to introduce that to everybody. So I'm looking forward to running that throughout 2025. If you need anything, let your boy know. Be an outlier. I'll see you guys later.